Gold has moved up 24% in the last 4 months. It's only gold that is glittering right now. What is going to be the trajectory going forward? How high could they go? The historic run on gold, and it just hit 1 lakh rupees. On one side, experts are saying that it could go to 1.2 lakhs or even more. But on the other side, we have analysts saying it'll fall 38%. Is this the start to a massive bull run that has just begun, or will we pause and fall? And what should you do? So, we'll answer whether you should actually buy more gold, you should actually hold on, or you should just wait because the market seems like it may fall. I'm sorry for my voice, but that won't stop me from actually explaining this. You know, every time the market goes up in gold, there are 2 kinds of people who emerge. One who say that this is just the beginning, it'll go up forever. And second, the kind of person who says don't forget 2012. So in 2012, you can see that just before this, the market had gone up a lot, and then we went sideways for some time. And then the market sort of just drifted 2012, 13, 14, 15. You can even include a little bit of 16 and 17 because nothing really happened back then, and the rise only happened 2019 onward. But if you zoom out 100 years, you'll see that gold has seen war, inflation, global resets, and God knows what all that has happened around the world. Yet overall, over a period of time, it has gone up. So it always thrives in chaos in the long term. So the question is, what is the chaos of 2025? We have the Russia, Ukraine, Israel, Middle East tensions happening, and now we have the US and China tariff wars happening. We have the USD currency fluctuations and even qualitative surveys like this where consumer confidence in the economy has actually fallen. Whenever people stop trusting economies and the government, immediately they stop thinking about growing their money and people think about gold as safety, right? I mean, mom has gold in her locker not because she wants a return from it, because it makes her feel safe. It makes you feel safe. Think about 2008. In 2008, markets fell down around the world, and for the next few years, gold went up 150%. When people are scared, they put money in gold. Remember this one point. It'll help us answer those 3 questions. But right now, the scenario is different. We have Trump's equation. That's literally the equation the government is using to figure out how much tariff to tariff who. And we asked the team to find out what's this talk about recession, and this is what they came up with. There's an inverted yield curve. There is survey data. There is analyst data. Everyone's saying that the government is likely to trigger a recession in the US, which could trigger a global recession. Now the point is that I have all the data here and you can see it, but there's no point in going through it. What we must understand is these 3 questions. How does this affect us? The takeaway is this. If a recession happens, gold will actually perform. If a recession doesn't happen, well, it'll probably flatline or do nothing. But do you think we can predict whether a recession will happen or not? If we could, these analysts would probably have consensus, and they don't. Maybe the answer is not in all of these global cues and what's happening in India. So let's analyze what's happening here. You know, in 1991, India had become bankrupt. In fact, we didn't have any money to import even 3 months' worth of imports. That means we could not run our country. So we did what any household mother would do. We pawned the gold. We took around 47 tons of gold, put it on an aeroplane and sent it to London. This actually happened. And in London, once that gold was received, we received a borrowing. It was a loan, but we got cash. Gold was our safety net in 1991. Gold is your safety net too. It's inside the Indian psyche. We have gold in the locker. Worst case, we will be saved. The RBI, our central bank, owns about 879 tons of gold, and I think it's about 11% of our total Forex reserve. The FM states that the government is not buying gold to replace a currency. So why is she saying that? Because the USD is actually the reserve currency of choice of the world. This is a systematic risk. If something happens to that one currency, entire economies could be affected. So a lot of central governments are hedging by having a diversified portfolio internationally by having gold, because at the end of the day, gold will still have value. But there's another interesting thing. I mean, all of us don't buy gold. We buy jewelry, right? Like the jewelry that you have in the locker, the family heirloom. But what's happening? Something really changed. From 2021 to 2024, gold jewelry demand, the jewelry, right, used to be 610 tons, and in 2024 it's 563 tons. This may not look like a very big difference, but it's stagnant or falling. However, if you look at people investing in gold online through ETFs in 2022, the total gold ETF was 460 crore rupees. And in 2024, it's 9,22,400 crores. I mean, that's a massive jump. This also means that people still believe gold works and gold is safe. But the mode of acquiring gold is changing. India and a friend of mine actually messaged me yesterday saying if markets fall, gold will be as a hedge, because when markets fall, gold will go up, and when markets go up, gold will go down. Correct? A lot of people think gold is safe. Gold is hedge. Correct? But they also think when markets go up, gold goes down. When market goes down, gold goes up. This common belief that gold and equity always move in opposite directions is not entirely true. Between 2006 and 2024, there are only a few years where gold went up and equities went down, or vice versa. In most years, both actually moved in the same direction. So no, gold isn't always the opposite of equity. It's more complicated than that. I know what you're thinking. Put all these things together. Gold is the perfect asset class. Nope, it's not. We'll play a game. Okay, here I have a bunch of data and you have to give me a reaction. From 1980 to 1989, gold gave how much return? Pause. The answer is 0%. Let's play again. From 1996 to 2002, gold gave how much return? Pause the video. I hope you guessed it right. 0%. And then from 2012 to 2019, I know you're not going to pause the video, it was also 0%. However, if you look at these spots over here, these periods, it gave a fantastic return. And this is exactly what happens on the internet. When you go online and when you see gold going to 1 lakh rupees, the only story you actually want to believe is that gold will keep going up forever. No asset class will ever keep going up forever. In fact, that the same thing is true for equity as well. So here we can see Sensex returns. It doesn't matter how much the return is. All you need to do is actually check how large the bar is over here. Amazing return, amazing return, amazing return, amazing return, amazing return. If you looked at the market just here and invested, your expectation would be here, and then next year you would have got nothing, 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 nothing. But this is also not true that when this happens that equity is very bad. You know this is an oversimplification that equity is good, gold is bad. The truth is, you want to own some equity, you want to own some fixed deposit or some fixed income, some bonds. You want to own actually let me just use this, some gold, because you really don't know when the market will go up. And I also want to add another asset class here, and I'll do it like this. I'll call it real estate. And I have some real estate data over here. Certain years from 2002 to 2007, real estate was going up like crazy. And then we had certain years like 2017 when it wasn't. You know, when an asset performs really well, like gold is doing right now, we feel phobe. Phobia is fear of being invested. If the market falls, then what? And then if you're not invested, then we feel for that I did not invest. What if it goes up more? In both cases, whether you're invested or not invested, you will feel fear. So let's answer these 3 questions now, shall we? The first question is, should you buy gold right now? Well, if you're thinking about a really long period based on all what I told you, what do you think? I think you should prepare to start investing slowly and have some exposure to gold. Don't go all out. The next is, do you think the market will fall from here? So, should I wait before I invest? We don't know whether the market will go up or down. But it's important to start even if it's very, very small. And the habit of doing this for a long term is what will win. Not this one move, whether the market will go up or not. Nobody knows where gold will go. And third, if the market falls, should I buy a lot? Absolutely not. Your job is to make sure you have a little bit of money in all kinds of assets. And if you have the habit of investing in them in a long time, you will win. Remember, systems win over a reaction on what happens to markets. Let that sit for some time in your mind. No one can predict where gold, or any market, will go next. But what you can control is your system, your discipline, your habits. Don't chase trends. Don't panic when prices fall. Build a portfolio that reflects reality, not headlines. Some equity, some fixed income, some real estate, some gold, and most importantly, consistency. Because systems win over reactions. If this video helped clear your confusion, drop a like and share it with someone panicking about gold prices right now. And if you want more content like this, hit subscribe button and comment share with your friends.